Good afternoon, ladies and gentlemen, and welcome to Coffee Chat, brought to you by the SA Property Investors Network. I want to say welcome and thank you so much for joining me, as always, on every single Monday, 1 p.m. Offshore or local? Do you have an interest in investing in internationally, or do you rather invest locally? We're going to be discussing international or offshore investing with a phenomenal gentleman by the name of Alex, and I'm going to be introducing him a little bit later. However, I want to know if it's your first time, joining us. Please just let me know in the chat box. And for those of you who actually it is your first time joining us and you don't know who I am, my name is Kali Masuani, and I'm going to be your host for the next hour. Quite a few things are going to be happening today, so we're going to be discussing quite a few things. But as always, I wanted to know, how many professional members do we have? And for those of you who are not aware of who we are and what we do, let me break it down. Simply put, Coffee Chat is a networking, I beg your pardon. Coffee Chat is a show that teaches you all things regarding property, and it is brought to you and sponsored by SAPIN, which is the SA Properties Investors Network. Simply put, who we are is we are like-minded investors who create a community to help individuals, further their careers in the property space. Be it you're brand new, you're starting out, or you are somebody with a healthy portfolio and you want to make it grow, or you want to transition into a different field such as development. The community that is the SAPIN network is here to help you. So as I said, ladies and gentlemen, just let me know in the chat box if this is your first time viewing, because I'd love to hear from you, and also how you found out about us. Subsequently, just let me know where you're watching us from, because we are streaming this live. It is all over the country, so you can be from Cape Town, from Johannesburg, Kenya, Belgium, or the UK, as our guest is from tonight. Just let me know where you guys are from in the chat box. I will be reading that out loud. So, ladies and gentlemen, I just want to mention a few things. And I think it's quite pivotal by virtue of you guys wanting to either know about property, or you're investors yourself and you want to expand your property portfolio. We at SAPIN have something that is phenomenal. It's just launched. It's called SAPIN Kitchens, and we're going to be partnering up with Tim Build. I'm not sure if you know about it. You should. If you are an investor, at some point you are going to refurbish and you are going to need some assistance in terms of kitchenware, because statistically the kitchen and the bedroom are usually the first things to be refurbished in order for you to upsell your properties, be it for buy-to-lets as in rentals, or you want to do a flip. So you can just check in the chat box. We're going to be having, the link for more information, be it SA, support at SA Property Network. You can check that in the link below. Also, we have something very, very, very necessary in our current climate in South Africa. It's called SAPIN Prepaid. And unfortunately, the founder is not here with us, Devin. He will be joining us next week in order to discuss SAPIN Prepaid. And essentially, it's simple. You guys are investors. Whether even if you don't have a property right now, by virtue of you wanting to learn and to know more, you are automatically in the space of investors, and you would want to know how to manage your electricity property, how to actually be more efficient with your electricity, especially with load shedding. So SAPIN Prepaid electricity meters are going to be your number one stop for that. So I'm just waiting for you guys to just let me know where you guys are watching me from. And if this is your first time, just literally send a hello. It's okay if you don't want to actually mention or say something. Just a simple hello will let me know that this is your first time watching us. And I'm actually quite honored that I will be the first person that you actually get to see on a Monday at 1 o'clock. Ladies and gentlemen, as I said earlier on, we have a gentleman who is an expert, and might I say with pride, an award-winning property investor in the UK. He met our CEO, Andrew Walker, when he moved from South Africa. I think it was about 2002. And he met this gentleman in the UK once he started investing, and he came back in about 2013. So our CEO has extensive knowledge about investing internationally and also having offshore investments. So we're going to be unpacking that. And he was coached by our CEO. So he now, the student has become the master. So he is now an award-winning property investor, and he's going to be telling us all the do's, the don'ts, the things to look out for what it is, you could potentially be worried about. Can you actually get a mortgage if you're in South Africa while trying to invest overseas? Can you get financing? How do you? All of those questions are going to be answered. And as always, I really, really would appreciate it if you put your questions in the chat box. Just let me know anything you want to ask Alex. If you've ever thought, of potentially diversifying your portfolio, and you're like, you know what, I think I might want to maybe, put a little egg or two internationally, this is the show for you. And this gentleman is an expert in offshore or international investing, particularly in the UK. So you guys have a treat for tonight, for today rather, I beg your pardon. So as I'm busy going to welcome him, I just want you guys to know, I need you guys to put this in your calendars, right? 20th of July. It's going to be big. It's going to be huge. No, I'm not trying to be like Donald Trump, but we are going to be having the APSA-sponsored public event talking about something very pressing, and that is the rising interest rates. So we're going to be using the hashtag AskAPSA, and we're going to be discussing from different individuals, from home loans to, economists, as to these rising interest rates. What is happening? And as you know, the NPC is actually going to be getting together to discuss again if we need to be rising the interest rates. I know all of us are just scared. Our wallets are sore. We're trying to combat inflation and the interest rate. It's getting a little scary. However, there is no such thing as a bad market. If the deal is right, the money will come. And no matter what the market says, if you find the correct deals with the correct partners and the correct community and the correct network and the perfect team, you'll be able to have a sustainable portfolio in the property market. So on the 20th of July, we're literally going to be having an APSA sponsored. So you can come in, get your tickets. You can start inquiring about that. It is on our website. We'll put the link in the chat box. You can just start finding out how you get your tickets for that event. It's going to be big. And I think a lot of you are honestly quite stressed, rightfully so, including myself as a first-time investor, as to, is this the right time? Should we not? How do we know? How bad can it get? We don't know. But what we do know is that we're going to be having experts from both the perspective of bankers and also the perspective of investors, for them to go, well, ideally, this is what you'd want to do, or actually, this is a great market for you to do X, Y, and Z. We're going to be having that on the 20th of July. And then the big one is going to be happening next month, and that is the women's event. I am so excited for obvious reasons. However, it was phenomenal last year. It was huge. It was a really, really big event. And if you guys want to potentially sponsor it, we do have a link in the chat box again, in terms of that. So I really hope that we have a chat with you. So as I said, ladies and gentlemen, I'm going to be introducing a gentleman of, elite expertise, who we are going to be discussing with him international investing, offshore investing, and everything that encompasses this. So without further ado, I would like you guys to help me welcome Alex. Hello, sir.
Hello.
How are you?
Hi, Kylie. Thanks for having me.
Fantastic. And what's the weather like in the UK?
Probably not as warm as in South Africa, believe it or not, but good.
No, we're also not that warm.
Yeah,
It's okay.
it's being it's being typical. It's warmish but rainy, so it's being quite typical. But it's good weather for investing in property. That's what it is.
It's good. I don't think I've ever heard of that. It's good weather to be investing in property. Yes, when you're indoors, you can focus instead of being outside in the sun. I hear it. Okay, so Alex, for our amazing viewers who do not know you, I'd like to just find out about you and just let us know who you are and also how you got started.
Yeah, absolutely. Well, thanks for having me, first of all. I did meet Andrew quite a number of years ago, but it was in 2002. I'm not quite that old. But yeah, I think, like most people, I read the Robert Kiyosaki book, the Rich Dad Poor Dad book, when I was quite young. Got interested in finance and property, in money and things of that sort. I got in touch with a few investors in terms of how would I become a property investor. I went to university with the aim of learning about economics and investing and things of that nature. And I became an estate agent for a while on some advice from an existing investor, which was good for a good few years. I was an independent estate agent through Remax in Edenvale. It was quite a good operation. It was quite a it's a good way to get started as an estate agent. But where I got started as an actual investor, which most people don't do, is I did some training where Andrew happened to be the coach, and he was my coach, and through a whole mentoring process on actually investing in property in South Africa. And I had some interest with obviously investing in property in South Africa, investing in property in the UK, and Andrew obviously had experience of both firsthand, and that's really how we got started. Ended up doing quite a few flips and a buy to let in South Africa, and then because of family, an opportunity came up to move to the UK, which we did, and then carried on doing more property here. Also with Andrew's guidance, because as it turned out to be, I moved not too far from where he used to operate, and still does operate. Got going from there, and just built more of my property portfolio, both single lets and sort of flips, buy, renovate, sell projects.
Okay, that's actually quite relevant right now in terms of getting coaching and getting the proper team behind you in order to do that transition. And even just to start out, I just wanted to know, you did mention that you were a real estate agent. Pardon me. Right now they're called property practitioners. But I wanted to know, is this where you always thought you'd get into?
I always wanted to be an investor. So when I first started out, just sort of out of university, I thought I went and I spoke to an investor that I knew who sadly passed away just recently, but he had done well for himself, and he has said you need to get the education. Well, he called it the 3 E's. You need the education, the experience, and the excess cash, is what he called it. At that time, it was quite a number of years ago. He said if you become an estate agent, you'll learn these things. As I discovered later, actually, if you get the right coaching from the start, as I did with Andrew, you leverage the experience, which is obviously the hardest thing to get, and obviously with the right connections, you're able to raise funds for the right deals, and
Okay.
So, are you still there? Are you still there?
No, I'm still here. Hello, Alex. As always, technology is against us.
Here. I can hear you. I can hear you.
Yes, you were mentioning how. Yes, I can hear you fine.
All right. Yeah. So I'm not sure where it dropped off, but basically, I realized that coaching through someone who knows what they're doing, you'll get the right education, the right experience, and be able to raise the finance and then earn some money from there. So that's the way that I ended up going. But to answer your question, yes, I always want to be a property investor.
That's actually quite interesting. Now I want to get into international investing or offshore investing. Would you say that international investments and developments are on the rise?
Well, from my perspective, being in the UK, being in the north of the UK, absolutely it is. And obviously I'm seeing the UK market. It seems to have always been a market that's been of interest to international investors. We regularly have not just South Africans, but people from Singapore, from Hong Kong, from the Middle East, mainland Europe, who are interested in investing. And I think there's some fundamental reasons to that, because there's obviously a strong, there's strong legislature. Even though the economy could go through, some ups and downs, the actual sort of structure of the UK as an economy, and and the pound itself are obviously big attractions. The supply and demand of properties in the UK is always in favor. There's just not enough properties being built, and obviously it's an island with limited amount of land and development. There's always a shortage of properties. It might vary depending on which strategy you're in, but over the long term, that's always an attraction. And I think one of the main things that I've seen more and more people invest in, in various reasons, is more hedging against the local currencies. So people from various parts of the world who maybe don't believe in the currency of the country where they reside, or where their funds are at the moment, and they like to be investing in, well, from my perspective, it's pounds. Obviously, I think the South African viewers, who are probably most of the viewers here today, will probably obviously experience the exchange rate, the rand exchange rate, and what that has done. And that's obviously a big hedge for investors to invest in the UK.
Ah, it's interesting that you say that in terms of the exchange rate and the currency value being something that is a strong incentive for it. But what I think the thing that most people always are questioning, and the reason why people are risk adverse, is the age old question, like, how does international investing differ from local? Because at least in your own country, you understand the market, you understand what's happening. Once you're looking at outside, you don't have no idea what's happening that side. So how does that differ?
There'll always be a difference, because every country will have its own laws and its own little tweaks, and the laws get changed all the time. In fact, there's a new tenancy bill that's being put on the table by government now to change and tweak things. So yes, you do need to stay abreast of how things are different, and it's maybe quite a broad topic, but you need to understand how financing works. Financing works quite differently in the UK to how it works in South Africa. You need to understand how it would work for you, whether you're residing in South Africa or or you're planning to move to the UK. You need to understand the typical kind of properties that you would be investing in, both from a numbers point of view and from a structural point of view. I was chatting to an investor just recently who had bought some properties in the UK, and he's looking at another one. He was asking how many bathrooms there are. Now, in a typical cash flow area, it's just one bathroom. And in South Africa, you would think if it's a 3-bedroom, you probably have a 2-bathroom, or if it's a 4-bedroom house, you probably have 2 bathrooms. But it's quite different. So you need to understand what you're investing in as well. From bricks and mortar point of view, there are obviously different structures. Whether it's in your personal name, limited company, whether you're collaborating or joint venturing with someone in the UK or not, and that all has impact as to how you structure your deal. Will you be able to get finance, etc. But I think at the end of the day, it comes down to what you're looking to achieve. Because I've come across investors who are looking to just buy a property for the sake of hedging in the UK, and they're not too they're not too sort of stuck up on how much cash flow is going to make or how those things are going to work. They're just investing for the next sort of 20, 30 years, which is fine as a strategy. If you're investing for cash flow, you're probably investing in different areas, and you might need less money than the other one. And some people have just decided, I don't want to actually buy a property in the UK and try and finance it, but I'll collaborate with someone in the UK. In some cases, I know some people did it with their relatives, some do it with their other investors on some sort of a joint venture or some sort of a collaboration split, or an interest split, or something of that sort. So it really comes down to what the investors are looking to achieve from investing abroad.
Okay. I hear you. That's actually a food for thought there. And just a quick one, ladies and gentlemen, if you just joined us, welcome to the SA Properties Investors Network. We're discussing international investing, or rather offshore investing, with the award-winning property investor, Alex. And I would like for you to ask your questions to this gentleman, who is a seasoned investor and quite knowledgeable, in the chat box. All the questions you want to know, whatever you are, scared to ask, please put it there, and we'll actually make sure that it gets to Alex. But as we continue, Alex, the next thing then is the standard one, which is, if this is my first time, let's argue I take you up as a coach. I know that I'm with a trusted team. What are the things that you want to look out for if one wants to invest internationally?
What to look out for if you want to invest internationally? That's a good question. The sharks is, and I don't mean the rugby team. There are always sharks out there who you need to look out for. It's just the nature of the game. I think that it doesn't matter where you are, but it's having someone that dealing with someone who you know. Like, for example, obviously, Andrew's known to the SAPN members, and he will know, what kind of investment you get in the UK, and hopefully, through his network, you'll find the right people. I think watching out for developments that are tailor-made for international investors that might not actually be, the right thing for the international investors is quite common, especially in the big metros of Birmingham's and Manchester's, where they build new builds just for the sake of selling them off to international investors. It might not be the right thing for you. It might be, but it might not be. So having the right team is the first thing. I think, like I mentioned, you need to know why you're investing. If you're investing for cash flow, you'll look for certain things. You'll probably look in northern areas where we are. Sort of East Yorkshire, Northeast Lincolnshire, sort of all around the Humberside area. It makes good sense for cash flow investing. Good yields in terms of just cash flow. If you're looking for capital appreciation, you might look at different areas. If you're looking at long-term assets, just to hedge your funds and just keep them in pounds, and you just want to cash it in maybe in 20 or 30 years time. You'd look at different types of assets, and if you're looking at obviously profit strategies, then you need to make sure that you've got the right team on board, the right sourcing agent. If you're using a sourcing agent, the right accountant is super key. And it's a property accountant. You get lots of online guys and just general accountants who might not know property as well as you need them to know, especially investing from abroad. And obviously, there's the architect, there's the building control, there's the planning consultants, etc. So in some ways, it's probably a similar team to South Africa, but there'll be different people operating in different spaces, and it's a case of knowing who's right for the specific project, which is probably where collaborating with the right people comes into play. What I would say in terms of looking out in terms of how you invest internationally is understand the buying legal process. I think that's a big one, and how the whole buying process goes, because that process is different to South Africa. In South Africa, when you make an offer, that's a binding contract at that point. In the UK, it happens much later down the line. The process is a little bit different. Also depends on where in the UK you are. Is different in Scotland versus England versus Wales. I think those are probably the main things to look out for when you're investing internationally. Those are the first things that come to mind.
Okay, so you pick your strategy, or the reason why you are investing, and that, we can argue, it basically helps you streamline the types of properties or the types of opportunities that you can then get, or you should look out for.
Absolutely, spot on. Yeah, you need to know what you're trying to achieve first. That's the bottom line, and then you build your team around you from there. And also you need to have your timelines in place. I suppose we all like to think of, how do I get into this property investment, or how do I get into this property JV or collaboration? You also need to keep in mind, well, when do I want to get out of it, and how do I want to get out of it? Because sooner or later, something will change, whether by choice or by nature. It's just how it is, right? So you need to know, am I investing for a quick flip, for a 12-month, 18-month, 24-month project, or am I investing for 5 years, and how do I exit it on the other side? or am I investing for 20 years just to work as average capital gains over time?
And I think this one is the big one. It's the one that's the most important, and arguably the one people usually want to know is that, like, how does one get financing to invest in the UK?
That is a big one. That is a really good question, especially at the moment. I don't know how much your viewers would have been following what's happened in the last 12 months in the UK market. We've obviously had the change of chancellors, or the Minister of Finance, basically is what the person is, back in September of last year. They tried some techniques that basically caused turmoil in the markets, and interest rates went up, not just for foreign investors, for local investors. In fact, mortgages disappeared for a few weeks because most lenders wouldn't even do mortgages. So it went through a short volatile period. That's all settled, but the interest rates are obviously higher. I think globally they are than they were before, which means that for local investors they're higher. Likewise, for international investors, they would have been higher. Can you get funding? Absolutely, you can get funding. Will it be as easy and as cheap as if you were residing in the UK? It won't be. That's the bottom line. It is possible. You probably will pay some sort of premiums over and above what the UK rates are. But yes, you can still get bridging finance, for short-term projects if you want to do that. There are obviously various costs to consider. There's costs on entry of the loan, costs on exit of the loan. There's monthly costs in the bridge. There's legal fees, survey fees, and that's just the bridge part of it before you refinance or sell. There's term finance, as we call term finance, or basically your long-term finance that you go on to, on your 20, 30-year mortgage or something of that sort. Again, it will probably be a bit more expensive than if you were residing in the UK. And look, nothing that I'm saying is investment or finance or legal advice. I'm just recounting my experience and the experience of others that I've seen do this. But yes, it is possible to get finance. There will be, there will be costs involved, and I think that's why I've actually seen some people go the collaboration route with local UK investors, because the cost of financing has made it a little bit more tricky, both for UK-based investors, local investors, to make the deal stack, but also for international investors. Whereas the collaboration route might just leverage that the opportunities to invest, and there are obviously still opportunities. There always are opportunities that might just look a little bit different as the market changes.
Mm-hmm. And this is another one that I think the viewers have frequently wanted to know and asked. Provided the team's correct, right? You have a solid team, you have a good network. Would one have to come to the UK in order to action all of this, or can you still do it from the country with which you resided?
It's possible to do it remotely. I've worked with investors doing both, both remotely and in the UK. As long as you have a good understanding as to what you're buying, and I think it was Richard or Robert Kiyosaki who said, money is seen with the mind, not with the eyes. So, some people really like to see and touch their property, and that's more investing to them. But I've dealt with investors who have never seen properties in their properties in the UK. In fact, some of the investors, even UK-based investors who are from the south, from London and thereabouts, a lot of them have never been in their properties, but they understand what they're investing in. They understand the sort of the supply and demand, and who their tenants are likely to be, and what kind of rental they'll get, etc. And they make an investment decision remotely. So yeah, absolutely possible, and there are a lot of people who do it that way.
Okay. Keyword disclaimer: this is not financial advice, and please don't just give your money to random people in the UK. Make sure you do your due diligence. You have the correct team, and as such, you can you can have an effective portfolio without necessarily having to consistently go. And when gentlemen like Alex, you're safer. Don't just, I'm from the UK, and you're like, oh well, I want to invest in the UK, and you give a random person your money. Please don't do that. However, if you are joining us, ladies and gentlemen, we are discussing offshore or international investments, particularly in the UK with the award winning property investor, Alex. And also, I just wanted you guys to remember to put your questions in the chat box. And I see we already have a question from Samkelo, and he wants to know can you explain what bridging finance is, and can a South African get finance for the UK, particularly the short term ones? Because we did discuss a mortgage, which is way more long term, but in terms of bridging, is that possible?
Yeah, absolutely. So bridging finance, the easiest way to explain it is it's like a bridge between you taking a property that maybe is in an unmortgageable state at the moment, or it's of lower value and needs some sort of work, and you need some finance, with whether it's to buy or to renovate, or a portion of that finance to get it to its best condition, to get it to its marketable value condition. That's essentially what bridging finance is. um, and there are providers out there who will offer you just bridging finance. It's obviously a bit more expensive than your longer term finance, um, but yes, the short answer is you can get bridging finance in the UK. You might be limited depending on obviously not residing in the UK, etc., as to how much finance you can get, or what kind of rates you might get it at. But you will get it. Mortgage products and finance products change almost daily, because there are literally hundreds of various finance providers in the country, and some of them have a certain niche and they operate within a certain field. And they bring products on and take products off all the time. So as a South African, can you get finance in the UK? Yes, you can.
Okay, and so some Kela also asked, do you also get guaranteed rentals? That is an interesting one. I think everybody now would be motivated to invest offshore if you're going to get guaranteed rentals.
Yeah, that's a good question. That's a good question, and it just depends on guaranteed by um, by whom. And there are charity organizations that do rent, or not rent. I suppose they take a lease on a property, like a 3-year lease or a 5-year lease on a property, that they house, well, depending on the charity, the different charities, but one that we've worked with, they do asylum seekers. So obviously a lot of asylum seekers who come to the UK in great numbers, then they need to be housed somewhere. And these charities that provide this housing, now they will take that property off an investor for a guaranteed rent for it's usually a 3-year or a 5-year period of time, which obviously is a much a much more what's the word that I'm looking for? It's a much easier approach to work with, where you know that you're going to get a set rent for the next 3 years, and you're going to get your property back, well, in the same condition. They'll do general wear and tear maintenance and that kind of stuff on the property. When if they want to return it to you, assuming that they still want it after 5 years, and you want them to carry on, then they'll just take it on for longer.
Okay, and as we are about to wrap up, as I said, the finance question is quite a big one. The last question is, can you get interest-only mortgages? If so, how many years is the mortgages?
Another good question. In fact, that's one of the big things in the UK, is that most mortgages are a lot of the buy-to-let mortgages, they are interest-only mortgages. You can get them on repayment and interest, but a lot of them are in interest only. A lot of investors use that approach for financial and tax purposes, which obviously their accountants will advise them on. And so, can you get interest-only mortgages? Yes. How many years? The mortgage itself will generally be sort of a 20 or a 25-year mortgage, but there's usually a fixed period. Well, you can have either a variable interest-only mortgage, or you can have a fixed period interest-only mortgage. And that again just depends on which finance provider, which mortgage provider you go with, because some will have an offer for a 2-year fixed, or a 3-year fixed, or a 5-year fixed. I haven't seen many above that at the moment. Although there were some, I personally have a mortgage that's on a 7-year fixed, which is obviously great because my interest rate's fixed for 7 years from last year. It makes it much easier to plan your cash flow. So there are those. Obviously, that again, it varies as to which mortgage provider you go with, and that's personal circumstances dependent.
And as we are about to close off, we have a few more questions. This is from Taurai. He says, locally, we use TPN for evaluating viability of a neighborhood and the tenants. Alex? Hello, Alex.
Hi there. I think you froze. Are you still there?
Yeah, I'm still here.
I think the busy. Well, I can see you moving again. I can see you moving again. Do you want to try the question again? I didn't get the question.
Yes. I'll just start it again. It's this one is from Taurai. They want to know that locally we use TPN for evaluating viability of a neighborhood and tenants. Does the UK have the same? And two, what is the recourse on default? Does the UK law favor tenants or the landlords? The landlord, and is the eviction process lengthy?
Wow, that's a big question.
That's
it's a very good question. It's a very good question, and that's a whole long discussion, really. But what I can say is a TPN. Yes, you will get. There are similar platforms in the UK where you can look at. The viability of areas from a rental point of view. It does get quite local in a lot of areas. Sometimes you might be on a certain street that works well, and you literally turn a corner or two, and that street might not work so well for you. Whereas obviously, a bit more generalized. So working with the right letting agent on the ground is key. I would say, even if you've done your overall due diligence. In terms of dealing with tenants and recourse with if a tenant doesn't pay, there is legal process in terms of the tenant has to pay a deposit. That deposit has to be registered with a deposit protection scheme, which if the tenant leaves and creates damages, you can claim directly from the deposit protection scheme. There's certain timeframes as to when you can do it. At the moment, as the law stands, you can give a notice to get your property back to a tenant. The Section 24 note or the Section 21, rather. That may or may not change, but there are other ways that if a tenant's in arrears, you can give them notice, and within a certain period of time, they need to either catch up their rent or they would need to vacate. That law is possibly going to be changed in the next year or so. But at the end of the day, the supply and demand is very in favor of landlords at the moment. It's just how it is. There are lots of tenants and not enough properties to rent, and rents have been going up. From that point of view, generally, landlords have had, I suppose, the luxury in the last while to pick the better quality tenants. So if someone's got a CCJ or some bad credit record, it might not mean that there will necessarily be a bad tenant, but you can do more due diligence into it, and you can be a little bit more picky with tenants at the moment. Again, that's the situation at the moment. It's a huge subject. I hope that was enough info there.
I think that was in depth, and if they want to know more or get into contact with you, they can just hit the link, which is support@SA Property Network, and we can put you in contact with Alex. We have another question from an estate agent in sunny Durban. They want to know, how does a South African resident get a mortgage in the UK based on the South African income made up of rentals, income, and commission? So I would assume because they are an estate agent, they are very com-based, and so they wanted to know what is the criteria. So is it similar to the South African way of getting a bond, or are there different rules in terms of trying to apply for a mortgage in the UK?
Sorry, the signal wasn't great, but what I got from it is basically, can you use your South African income and commission income to get a mortgage in the UK? Is that was that the question basically?
Yes.
Yep. All right. So the short answer in general is probably yes, but you'll be limited in the number of lenders. As I mentioned earlier, the market, the mortgage market, the finance market keeps changing all the time, literally on a daily basis. And there'll be a lot of lenders who just won't lend to investors from abroad. A lot of lenders will lend potentially to not the investors from abroad directly, but to their limited companies in the UK, which is how most international investors end up buying. Is they set up a UK limited company, and that UK limited company buys the property. That way, the lender knows that they've got security over the entity within the English jurisdiction. What kind of interest rates you'll get, I don't know, and how much of it they'll take into account, I don't know either. That's where you need to speak to a good finance broker. I have a couple of finance brokers that I speak to, whether it's a more commercial property or a residential property, and they would be able to advise accordingly. Again, different brokers, different lenders will have different niches. I know some people who have managed to get some finance, and they might just need to prove how they top up their income. But yeah, the best thing would be to speak to a UK-based broker who deals with foreign investors, and with an accountant, absolutely.
Okay, and then we have a few more questions before we wrap up. We have a question that asks, do you recommend I buy properties in a trust, a company, or my personal name? Now, this is actually quite a good one because, of uncertainty, I beg your pardon, of UK law. So traditionally, we'd argue, you do it in a company, but maybe it would be more feasible to do it in something else. So what would you say is the best way to buy properties in the UK?
Right. That again comes to what is the purpose of your of you investing in the property, and here you would need to speak to an accountant again, because that would be basically financial advice. What I've seen a lot of people do, and what I have done personally myself, is setting up a UK limited company and purchasing via the UK limited company. It will vary from situation to situation. I have both personal, properties in my personal name and in a limited company. Trusts are very expensive in the UK, and I think they're very specialized when you get a really big portfolio, and that you would need to seek separate financial advice on. But generally, it's a UK limited company. Sometimes it's personal name. Again, it depends on what you're trying to achieve out of the whole process. Is this the kind of property that you're renting out now, but you're planning to move to the UK in 5 years' time, and it will become your personal residential property, and you're able to buy it cash? Then a limited company might not be the best thing for you. Or if you're just buying one, it will also vary on your tax situation, in South Africa and in the UK and wherever else. What I have seen most people do is buy in a limited company, a UK limited company that's set up here with a bank account that's set up in the UK. Because if you are going for any lending, the lenders are probably 99% of the time will want to deal with an entity that's based under British jurisdiction.
Mm-hmm. And as we wrap up, I've said that quite a few times, but it seems people have a keen interest in investing offshore and investing in the UK. So the questions just keep coming. But as we wrap up, I have one more question. It says, single lets, 1-bedroom flats, what prices are you seeing? And the rent for these single lets, what is the average market rentals for single lets in the UK?
I mean, that's really broad. That's kind of like saying what's a 1-bedroom flat in South Africa. It really depends. Are you in Joburg or in Cape Town or in Durban, and which side of all of those you're in. It really varies. If you're in the metropolitan of obviously London or Manchester or Birmingham, you're going to pay a lot for it. And then just keep in mind that you're buying a leasehold, which is quite different to a freehold property, which is you owning the property outright. So there are sometimes other costs and other things to consider when you're buying a leasehold. We generally don't buy very many leaseholds because of how a lot of them are structured. But and a one bed where we're operating, we generally don't go for a one bed unless it's a house share or a HMO. I think that there's similar names in South Africa for those. It really depends on what kind of market you're going for. Because they can really range from from a bog standard, very basic house share room that you'll rent from about 60 or 70 pounds per week to anything that's like 190 pounds per week per room. And this is not the whole house, but per week. It depends again if it has en suites, what kind of finishes it's in, what kind of road it's on, what kind of facilities it has. We generally prefer to go for houses though. 2 and 3 bedroom houses, the kind of the typical rental stock. It's where tenants generally tend to stay longer. It's the simpler investment. It's an investment that I'm personally a fan of because a lot of my houses are just 3-bed houses, 2-bed houses. And generally, I've got a few in Grimsby and in Hull, which are again in the sort of the Humberside area, and they are now going at about close to £600 a month for a 3-bed house. Again, these not fancy areas; they're not bottom of the range areas either. They're just family homes, 3-bed, 1 bathroom, 1 or 2 reception rooms with a small kitchen. Again, that will vary on the type of house, whether it's semi-detached or terrace. But with the way the market has gone at the moment, the rents have gone up quite a bit. And it sort of 550 on the private rental sector market, 550, 600, depending on where you are in terms of the areas is typically what's been achieved. Having said that, what I'm seeing a lot at the moment are all the landlords who have not maybe kept up with their rent increases. So some of the properties that I've personally bought and that I've sourced onto others have been from retiring landlords who have had 1 or 2 properties. They haven't increased their rent. They might be sitting at, say, £400 where they should be, say, £550. But they're selling because, they've had their good time. They're cashing in now. They just want out. There's an opportunity in that you buy the property now, knowing that maybe not in one tranche, but over a period of time, you can increase that rent up to market rent. And that obviously increases your yield. So you're buying a property based on its current yield, but you increase the yield over the next 12 or 24 months. That's been an approach that's worked quite well in the last couple of years, both for myself personally and for other investors that I've dealt with.
Mm-hmm. Alex, I want to say thank you so much. This has been very informative. I see, the questions just kept coming. Unfortunately, we do have to let you go. Ladies and gentlemen, I want to say thank you very much for joining us, but also thank you so much, Alex, the award-winning property investor. And also, hopefully we'll see you quite soon on the show again, and we'll just be discussing offshore investing yet again.
Absolutely. Thank you very much for having me. And happy to share knowledge. Obviously, you can get in touch through Facebook or social media, just alex.demi.uk. I've got a unique surname, so I suppose not hard to find me, but happy to share knowledge. Looking forward to doing this again. And I hope your viewers found this of value.
Thank you so much. And ladies and gentlemen, as I said, as we wrap up, I just want to mention that we are going to be having a huge event, which is ABSA sponsored on the 20th of July. And that's going to be a public event where we're discussing the current economic state. So rising interest rates. I know all of us are just eyebrow raised and just conscious of it. So if you want to, you can just get your tickets in the link, which is in the chat box. Also, if you are a seasoned investor or first one, we have a new product called Sapin Kitchens. And what that is for all your refurbishing needs, we are going to be partnering up with Tim Build. And that is how you're going to be able to get discounts and, unique kitchens for your renovations, for your flips, for your multi-lets, your buy-to-lets, whichever kind of property it is that you have. And as always, as I said, next week we are going to be having Bevan on as we briefly discuss Sapin Prepaid, because we all know electricity is an issue. And we would like to be more efficient about it and be more cost effective about it. And he's going to be discussing Sapin Prepaid. However, I want to say from me to you, I want to leave you with this. Next week, we are going to be having an APSA candidate. We're going to be discussing something pretty important, especially if you are entering the property market, you're going to be a first-time investor, how to get financially ready. That's what we're going to be discussing next week, 1 p.m. at the Coffee Chat, brought to you by Sapin. I hope to see you there. But I want to leave you with this. What exactly do you want to achieve in property in the next 6 months? Because as we know, the first 6 months have gone up. You still have another 6 months to do the most and actually start your journey with the correct team, and that is in the SA Properties Investors Network. From me to you, I'll see you next week.